Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So yesterday's performance, you could see, stands in a row of the trading plan that we discussed in the weekly report. So we have few grabbers, and overall price behavior and the shape of the price suggested that downside action actually was more probable than any bullish performance on a lower time frame, despite that we were watching for the hand and shoulders. But as we discussed in the weekly report, the performance around minor hand and shoulders pattern that actually has become the triggering pattern for taking the long position. It has brought good results in general, but it was not sufficient to reverse the situation on the fall time frame chart, and market just collapsed to raising the pattern. So that stands in a row with the longer term story that we have on the daily chart, where we're watching for this ABCD with the target around 1820, 1825 area. So that's our major points to keep an eye on. So with the current pullback, we should not be, pay too much attention to it. It's just because this pullback mostly stands because of the overextension of the interest rates. So if we'll take a look at the 10-year yield, it also shows minor pullback because it really overextended, even on the monthly chart. And it's absolutely normal that 10-year yield shows the downside retracement, and it is a bit surprising that this retracement is so small. So in this situation, in general, retracement should be, and as a rule, becomes stronger. So maybe it just suggests existence of the big amount of the sellers on the bond market. But at the same time, it brings gold chance to show some pullback or stay a bit flat. At the same time, we should be ready for a downward continuation, because on the performance that we see here on the lower time frames, it brings absolutely no signs of the reversal, no signs of the changing on the sentiment. Here's flag has been broken down that we have discussed, and take a look at market actually stands below the flag. So we do not see any sharp, fast upward reversal and returning back to the flag. It means that breakout is real and market stands on the way to the major target. That's the major conclusion that we're getting on the daily chart. On a lower time frame, market brings few setups for trading. So here, first of all, our grabbers worked perfect. As you can see, market taking out of these lows, drop below these lows. Those who are using the stop sell order should also feel okay, just because we said you could either deal with the grabbers or you could just use stop sell order around this area. Breakout of the right arm tells you that markets keep going lower. And since we have the failure, some kind of the hand shoulder, something of that sort, it tells that taking out of these lows will be the question of time. So it should happen sooner rather than later. So that's what we have on 4-hour time frame chart. The trading setups itself stand on the hourly chart. Here is few moments exist. So currently, guys, we have actually the bread and butter sell trade, because if you put here the moving average, you will see that we have pretty nice frosting action. Here was barely closed above the 3x3, but I'm not sure that has happened. But all other candles, despite this volatility, was below the 3x3. So here we have the frosting action. Two candles up, market hits the 30% level, forming the bearish reversal sign. This is bearish reversal candle and the starting point of the bread and butter trade. On the hourly chart, currently it's probably difficult to catch it because it stands already halfway to the target. But here we have interesting detail. First of all, we have this ABCD pattern. Yes, this is a bit slower, but we have the OP that has not been reached. So if even you will use as the A point this starting point, this starting dropping, anyway you will see that the OP has not been reached. And it means that as a result of this bread and butter trade might be direct straightforward action to the OP. This is first that we could get here. So market should try to complete this ABCD target. Larger scale performance led us to consider even the butterfly, because this butterfly with the 1834 and even 1618 target of the 1813 envelop the target on the daily chart. So it stands around the OP on the daily and around major 618 support. So somewhere between these levels, final destination point should be completed. So the butterfly might be particularly the pattern that should lead market to completion of the major target on the daily chart. For the bulls, the only minor setup that you could consider if we are wrong on the immediate completion of the OP and retracement might be a bit stronger, as here we were considering the brand body, the hand and shoulders, if you remember, this was a nice pattern. It's traded last week. Here's again, that might be the same similar pattern. Here you could see minor butterfly, it becomes the part of the hand shoulders. Now market could form another shoulder. You could think about taking scalp long position with maybe more extended A, B, C pattern to the upside, somewhere to the agreement maybe 1873, 1876, if retracement on the interest rate takes a bit longer time. That's actually two major steps that we have. Bears should keep an eye on a possible downside continuation, wait either for a confidence if you'd like to take the short position or to act in some different way, as I said, dealing with this bread and butter, using some other way to take the position. For the bulls, the only step that we have here is this one, possible minor hand and shoulders, but be aware of failure and drop your time frame to the 5-minute chart. Watch what is going on around the potential right arm's bottom. So that's what we have on the gold market. Let's keep watching. But in general, guys, all this stuff that we're discussing, these pullbacks or something of that sort, this is just temporal stop on the way down, mostly because of the retracement now stand in all markets across the board. In the stock market, forex market, interest rates, this gold is not an exception. But this is not the changing in overall view and overall sentiment on the markets. It's just technical pause because of some technical overextended. The market needs to relieve this before keep going lower.